Hi, this is Michael, and we're just looking at the Australian dollar chart once again. So I thought I'd start off with just a question from one of the viewers, basically asking what do I think of the 69 cent area and why is it, such a resistance point. So basically, with all E waves, all breaks of E waves, you get this kind of resistance due to it being needed to be broken to be confirmation. And if it's not broken, then, well, simply put, the market, it's just not ready to go there yet. Um, Not necessarily that it's a resistance of such because it hasn't really touched it, but rather it's just the market just basically going through the motions, getting ready for its continuation of the trend that is, beginning basically. So, for example, if we go back to, let's say, um, okay, let's look at it this way. If you go back to 2020, right, we just had a big crash, right? What's the big deal with moving up after the big crash? There's a lot going on down there. There's a lot of confusion. There's a bit of, you know, corrections going on here and there. It doesn't always take off as fast as it should, but definitely it does end up moving. Uh, you know, in the direction of the trend. Now, in saying that, the first initial bounce can be pretty decent, but then you still come back a few times, A, B, C, D, E, or whatever it is. You still get a lot of chop going on. Now, this is for a start of a trend here. We're talking 26 days roughly, right? But then you go back to where we are now, and how many days has it been since that low back here, right? Well, it's been 74 days. Now, that's definitely interesting, except we haven't taken into account the D and E wave. So, what about since the end of E wave? How long has that taken? 53 days. Still fairly decent time, taking up a lot of time to get cracking in this trend. Um, Look, the only thing that this is going to do at this point in time is go up higher if it manages to break that level. Now, the reason that I don't think that it's going to go back down in any meaningful way from this point on is basically like when you start off a 1-2 pattern, right? When you start off this 1-2-3 type idea that a market goes down, it's definitely much of an Elliott thing, and Elliott wave will get you in trouble at best of times. But in saying that, when you get this close to the beginning of the initial move down, you usually end up breaking it, right? You might get a lot of people short here, a lot of people who have their stops above that level, maybe a lot of people who are freaking out around that level who are short, and potentially they could be taking profit, or maybe a lot of people are continuing to sell at the highs. That could be it, right? Because they're adding a short position and they're just selling, forming these, you know, intermediate degree mini tops, right? But then as time progresses, as we move forward, you just see these things kind of knocked out, right? They just get knocked out. Now, that doesn't mean that once we break up out of this, we're not going to come back down again. There's a lot of levels that have been around this area that I've mentioned in previous videos that cause this type of price action where you go up and down, up and down, up and down, up and down, right? There's a lot of levels of importance going on in this area. So it's really no surprise that we're consolidating here I mean, after all, look at the pattern to begin with. It's a weak 5 wave move, right? And a weak 5 wave move, really, there's a reason for that weakness in the beginning. So, I mean, it's the reason is there already. This is just a continuation of the idea that, we're off to a bit of a shaky start, but, once we get all the relevant waves in place and there's just no more room for any more correction, then of course it'll just break higher. Unless it's already has broken down by then, which at the moment I'm not really seeing that type of evidence, I suppose. Now, yesterday I did post something right at the lows once again, which I tend to do when my view just doesn't seem to be shaken very much to the core to the point where I actually change it. But I did say if we are going to see something higher, likely it'll be a D wave. Now, in this case, the D wave, it barely has produced the first wave up because I can tell it's going to be an expanded type of D wave, right? So, is can we see 5 waves up done yet? I can't see it because the first move up here, there's nothing that matches that length. So for me, we're going to see something like this, and then followed by something that comes back down to correct, right? A, B, C, D, E, whatever it is, and then go for the next leg up for the, oops, hang on, for the zigzag, right? Right, something like that potentially, and then come back down and retest it again before continuing. That type of thing is what I mentioned in my video yesterday, right before the non-farm payrolls. Even though the numbers were great, the market doesn't care, right? Which is why I believe the waves are very important when it comes to understanding what the markets are doing. Because like George Gammon himself just said in a video overnight relating to the same subject, he says the real economy is disconnected, right, from the financial economy. The fundamentals just don't work. So what does that tell you? It tells you that, well, shouldn't Aussie dollar have gone lower if the fundamentals work, which they don't. We know that already. You take a look at what happened in the US dollar, right? I said, look, this is unlikely and it looks very strange, but this could be 5 waves done. What happens next? It turns around, right? Now, I say this is probabilities, right? But why do you think I drew that channel in the first place, right? Because it's unlikely to me that a wave two of which I believe now is more than likely in place. We just haven't seen that low broken yet to confirm it, right? And this is probably another reason why Aussie dollar hasn't gone above 69 cents yet, is because we just haven't seen that confirmation on the US dollar chart of a break of the wave E, the start of wave E. When we see that kind of break, that's when we'll probably see it in the Aussie dollar, except now I think that's going to happen sooner rather than later due to what's just happened in the markets overnight, right? So, as I mentioned yesterday, very small and short and sharp wave two. That's actually where E wave ended in the Aussie dollar, which is interesting because we only just started this trend in US dollar down. It's a completely new trend, its own wave E, whereas in Aussie dollar it's part of a wave two. So there's definitely ways that you can tell what each wave means on each market, and explaining why certain waves are short and sharp is because in one market they're one thing, and in a market they're another market they're another. And here this is wave two, where in the Aussie dollar it's a wave E. So can a correction form a 5 wave type looking like the shape of a 5 wave move in an entire correction? Well, it can happen as long as you go down to the smaller degree and observe the waves, and if they fit that, then that's more than likely the case. But to have a wave two of three continue to correct higher, even though we saw a very small wave two up the top here, look, that's why I put in the channel. I draw a 2-4 trend line down to the third wave, and I go, you know what? I have a feeling this is going to be meaningful somewhat due to just things that I have observed in the past, um, namely the euro back in 2020 when I predicted its move higher and traded it somewhat to some success. And, like this is important. It seems to have made a difference to the analysis. Even though it's not really an AriasWave official thing, it still is covered in AriasWave as being a 2-4 trend line. And even in a weak 5 wave move, that's pretty impressive. But it did have a meaningful impact down at the lows here and at a news event as well, right? Which is even more impressive. But the thing is that like this type of wave E, it's got to be of the weak sort. Even though you had a big zigzag in the middle, that's just like a zigzag wave 3, in my opinion. Now, I was thinking that absolutely, I was thinking that yesterday. But you got to be careful when you make those type of predictions. To me, I'd rather make it look a little bit more normal and natural and just say, oh, look, it just rejected this area and we just need to see a break of this area here. Because a lot of times in the past, yes, I was wrong. But as you get better, you don't also just get better at the analysis, you also get better at what you're saying too, because that can also wreck you. And not that I really care what I say, if it wrecks me or not, but I don't know. I just like to improve as I go along, improve the analysis. So yes, I did allude to this area. Uh, a D wave will likely break this move, and a lot of the times D waves do break the resistance. Um, if this is really wave one here down at the lows, and we saw A, B, C, yeah, D wave will break that more than likely if it's actually supposed to go higher. This is messed around the 69 level so much so now that I believe it's absolutely going to do it. Normally, when you see a pullback, if there is going to be a trend continuation, it'd be to roughly 0.618 or 50%, not all the way back to where we've seen it. Back when I was still learning the waves, this would have wrecked me absolutely. I would have just kept thinking it's going to go down, even though it's getting closer and closer to the end of my trade, right? A lot of people might be able to, you know, um, relate to that type of thing. Well, that's why I basically created AriasWaves. I'm sick and tired of that, right? I'm sick and tired of feeling clueless at the end of the day. When I know it's just laziness, there is a way to know what's going on. I just need to actually, get to work, and that's what I believe got me to this point where I can actually make a video that goes over 10 minutes and it doesn't sound like I was just talking shit the whole time. Well, hopefully you found this interesting and informative. I'll keep you updated on what comes next. Thanks for watching.